Hello everybody and welcome to the Daily Horizon View. Today's date is the 28th of the 5th, 2019. As always, we're looking at the ASX exchange traded funds, and this is our top 5's. Today our spotlight is CETF, which is the VanEck Vectors ChinaAMC CSI 300 ETF. Hang around for a look at that one. Be worth a look, I think, anyway. Moving on. We are here to crack your financial sky. Here to give you guys information, really, just to build up everybody's confidence, I suppose. Give us a thumbs up, give us a subscribe, greatly appreciated. Definitely helps me along with my work and getting videos out there, expanding the audience. Top 5 percentage rises. We had QRE, CNew, Cure, CETF, which is a spotlight, so hang around for that one. Very interesting. And OO. So for those who may have watched yesterday's video, QRE is the BetaShares Australia Resources Sector ETF, and that tracks the performance of the Sol Active Australia Resources Sector Index. That ETF has a market capitalization of just over $32 million. It pays a small dividend of roughly 3.6%. So we saw a rise today of 2.32%, which equates to 15 cents. We had a reasonable volume through on that one, more than normal, I think. I'll have to double check it, but it looks to be quite high, of 9,800 shares traded. Top 5 percentage falls. We saw MNRS, GDX, ETPMAG, BEAR, and BNKS. So just a refresher, MNRS is the BetaShares Global Miners ETF, and that's currency hedged. That tracks the NASDAQ Global X Australia Gold Miners. That's a relatively small ETF as well, $7 million in that one. We saw a fall today of 1.16%, which equated to 4 cents, so not a major plunge by any means. We saw a volume shares traded of 8,100. It's not too bad for such a small ETF. Obviously, people trying to get out of that. So GDX is gold, so people getting out of silver as well. The bear ETF is not the best, and also people moving out of the banks, so moving into other assets. Top $5 rises. SPY, IHVV, IVV, IJH, and IKO. So SPY is the State Street Spider S&P 500 ETF, and that one tracks the S&P 500. That's a relatively small ETF. We'll see a market cap of roughly 31 million. Pays a small dividend of 1.76%. We saw today a rise of $1.82, which equated to 0.45% on a very, 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 very extremely low volume of 26 shares traded. Nothing to see here. Top $5 falls. We saw GDX, ETPMPM, ETPMAG, VCF, and IEU. So for those who have forgotten, GDX is a VanEck Vectors Gold Miners ETF, and that tracks the NYSE ARCA Gold Miners Index, and that is a very large ETF with a market capitalization of roughly $12.3 billion. We saw a little fall there of 27 cents, which equated to 0.91%, just under 1%. We had a volume of 18,300. That's a reasonable volume for that ETF. I'm sure that'll figure in the following slides as well, GDX. Top 5 number of trades. Let's have a look what we saw. VAS, IAF, BGS, IOO, and IEM. So VAS is the Vanguard Australia Share Index ETF, and that is a little different to most of the bigger ETFs. And this tracks the S&P ASX 300. We see a market cap roughly $3.5 billion for that one, so one of the bigger ETFs in the Australian market. That has a dividend yield of 4.45%. Reasonable rating from Morningstar, was given a bronze rating there. So number of trades, we saw 213 on the buy side because we saw a increase in price of 37 cents, which equated to 0.451%. Top 5 for volume, we saw ISO, NDQ, HAC, USD, and IOZ. So ISO is the iShares S&P ASX Small Ordinaries ETF. The fund invests primarily in Australian small listed securities that make up the index. This one is a reasonable size, not the biggest but not the smallest. So there's a market capitalization of $107 million. You get a small dividend yield there of 2.33%. Morningstar give it a rating of neutral. That's an interesting ETF. I'll have a look at that one in the spotlight another day. Volume-wise, it saw 140,000 shares traded. Shares, looks like on the buy side, we saw a rise of 6 cents, which equated to 1.17%. So not a major change here. Top 5 for value, we saw VAS, IVV, AAA, STW, IAF. So as mentioned before, VS is the Vanguard Australia Shares Index ETF. Pretty slow day on the market today. Not a great deal of volume, not a great high number of trades. Therefore, value is pretty low as well. So pretty pitiful day actually when you look at the numbers here. So VAS value of trades was $4.9 million. On the buy side, we saw a rise in price of 37 cents, which equates to 0.45%. So pretty low, not a pretty average day on the market. Okay, let's crack into the spotlight for today, and that is CETF, which is the VanEck Vectors ChinaAMC CSI 300 ETF. A bit of a mouthful there. So the VanEck Vectors ChinaAMC CSI 300 ETF seeks to replicate closely as possible before fees, charges, blah, blah, blah. The price and yield performance of the MSCI 300 index. Index is comprised of the 300 largest and most liquid stocks in the China A share market. So big end of town on China. Pretty much one of the only ways you can actually get access to Chinese market. That's not Hong Kong anyway for an individual investor. So why would you buy this? Why would you look at it? You get 100% share China A share exposure. So the first US listed ETF that provides exposure to the China market, but this one is being replicated on the ASX. A-share growth driven by domestic consumption, which we'll have a touch on later. So domestic consumption growth in China is the largest in the world. Broad and comprehensive underlying index, so the index is performing pretty well. The MSCI 300 index represents approximately 59% of the total market cap of China's 2 stock exchanges as of June 30, 2015. I'm not really sure what the current numbers are, but that's just old information. But the 300 largest companies definitely make up a lot of that index. Click through this rubbish. So we saw a net asset value of 53.91, trading just above at 55.11. Market cap of 74,400,000. Management fee is getting up there, but I suppose it's a China sort of international emerging markets type ETF, so 0.6% is probably not too bad. You get the distribution annually, typically in January. Dividend yield looks to be around the 8% mark, but it was a little bit hard to get a read on, but I think that's roughly what it is. So this ETF gives investors exposure to the Chinese economy. China is speeding headlong into a transition to domestic consumption, which is driven by a fast-growing GDP per capita and a progressive domestic government policy. Well, progressive to a certain degree anyway. The Chinese economy is set to become the largest in the world over the next few years, pretty much outpacing America, and that's what all the trouble is about now, bit of a power shift. Therefore, that's where most of the growing companies will come from. So you're not going to see companies out of the States growing as rapidly as they have the last 30 to 40 years. However, China is not without its risks, so caution is advised. And if I put some money there, I'd be cautious and I wouldn't actually overinvest, but you kind of almost have to, just to get a bit of exposure to some Chinese companies and the growth that's potentially coming out of China. So as always, you need to do your research, cross-match, all that type of stuff, and see what else is actually in the market before you make a purchase. I would suggest, as a starting point, having a look at IZZ and also China New, which we've had a quick look at on the Spotlight previously, so earlier this month, I think, from memory. So quite possibly go back and have a look at that one as well. Click through this. So definitely China is a place, it's a little bit difficult for the average retail investor to actually get access to. But, I think it's probably reasonable to get access to the Chinese market via an ETF like this. Hasn't performed the best, so getting about 8%, I think, back since inception. So it's not that hasn't performed greatly. I mean, it hasn't shot the lights out, but it hasn't been in the crapper either. But hasn't gone as good as I thought it possibly could have. A lot of these companies I've never heard of. Might be worth just having a look at those companies and sort of seeing what they do. Insurance companies, Muay Thai. I don't even know Kill Chow. I don't even know what these are. Obviously, there's some bank companies, electrical appliances, banks. So you've got some big companies there as well. So industrial companies, city securities. So there's a few big companies, pharmaceutical companies. Worth a look. China's probably where most people are going to find their growth now over the next 20 to 30 years, is my take anyway. So as always, we're not promoting any particular ETF or product, purely information here. So you need to take your own financial situation into account and get additional information and complete further research as and where required before we make any purchases. As mentioned before, we're here to give you financial just information, I suppose, trying to demystify the whole world, make it not as scary as it appears at times. So we're here to crack your financial sky, make you guys a bit more confident if we can. So give us a thumbs up, subscribe, and make sure to hit the bell because you want to know when the new videos come through. Sometimes I try to get them out at the end of every day, but sometimes it just doesn't happen depending on what else I'm doing at the time. Thanks, guys. Leave a comment. Yes, give us a like. Greatly appreciated. Catch you tomorrow. Ciao.